RMB. What's your outlook?
Sure. So my outlook is for the RMB to continue to weaken slightly against the US dollar. I think at some point there will be key levels such as 6.65 is our near-term level, and then eventually 6.95 is where I think the central bank will probably draw a red line in the sand and not let it weaken beyond that point.
665, because after that it becomes politically indefensible? Or?
680 and 695. I think the playbook you should use for China is what they did after the US election in January 2017. We all know that a stronger dollar pushed dollar CNY higher, but around 695 they started sending very clear signals in terms of where they set the fix versus where the model said it should be calculated. So I think they're going to try to slow it down, and we think we saw some of those hints today with today's fixing. They're going to slow down the advance, but eventually they're going to tolerate weakness up until, I think, 690, 695. That's when they release.
So that's the line in the sand. So let's get this right out there. We are not talking about a big one-off devaluation a la 2015.
Correct. So there's a big debate right now in China about whether or not RMB weakness is a casualty of the US-China trade war or whether it's a weapon in the US-China trade war.
Which is it, do you know?
I think it's a casualty of the US-China trade war. If you think about the way EM currencies typically respond, if you have a geopolitical headline where the US targets, say, Indonesia, not China, you would expect dollar IDR or the rupiah to weaken on the back of that, just like you'd expect Indonesian equities to weaken on the back of that. So in China, we're seeing lower stocks as well as weaker currency. So this alleged economic benefit that Chinese companies receive from a weaker currency, it's clearly not driving the stock market.
So weaponizing RMB, weaponizing buying of USTs is basically just theoretical, right? In practical terms, China is not going to do either.
Right. I think those are tools that maybe the leadership considers, and academics and researchers like myself, we always think about the options on the table. But if you think of the consequences of doing either of those, it would be sort of self-inflicting for China to do that. If it sold off its treasuries and caused a big sell-off in USTs, causing on a wider financial panic, it would also hurt China's own economy and China's own currency as well as other countries. I think right now China wants to be seen as the responsible global power who's looking out for free trade. They wouldn't want to cause collateral damage onto other emerging market and developed market economies.